So I would like to formally welcome you to Financial Insights Media Workshop. Can I get a round of applause? Great, great. I'm loving the energy already. To give a bit of context as to what we will be doing today, this is Financial Insights' second media workshop. The first one we had was in Lusaka, and obviously the second one we are having is here in Kitwe. We are very excited to be here, and I hope you guys are as excited as we are too. So the whole idea is to basically give each other a room, a platform, to be able to educate ourselves on how to accurately describe and give information to the public on issues such as what we'll be talking about today, mining. So before we get anywhere further, I would like to invite the CEO of Financial Insight, Mr. Mumbi of Chibesakunda, to give us a few opening remarks. Can we give him a round of applause?
Workshop number 2. On behalf of the team at Financial Insight, I'd like to first and foremost thank our partners who have made this possible. So salutations go to HLB Zambia, as well as Chibesakunda & Co. and Rolls-Royce, who have also come on board as a sponsor. So guys, give them a round of applause. Now, as Chewe has alluded to, Financial Insight is a media company. And like you guys, we thrive on content. But content is not enough if you cannot put context or some level of understanding. We have been at this game for 8 years now. I've been in the role of CEO for the last 2.5 years. And my heart beats for journalism and journalists. And we've had the privilege of being able to track the work of Zambian businesses. We've had the privilege of also speaking to CEOs of Zambian companies. We firmly believe that there's a lot of content that comes out of these companies. So we look at this as we're in this together. We're here to learn. I've also got my notebook, and I'm very curious to hear what our various panelists have in store. So without further ado, I'd like to invite one of our sponsors to just give us a few remarks. We have to pay the bills, guys. We have to pay the bills. So I'd like to invite a representative from HLB.
Good afternoon. Can you hear me? Good afternoon, everyone. My name is Violet, and I'm coming from HLB Zambia. I would like to extend our gratitude to Financial Insight Zambia for this opportunity to participate in this mining journalism workshop and to also be able to share this platform with esteemed professionals and stakeholders as yourself. HLB Zambia is a stem from HLB International, which has presence in over 100 countries, Zambia being one of them. So looking at HLB, we do recognize that the mining sector operates in a very complex and legal and regulatory environment, and as such, audits and accounting professionals play a very important part in helping our clients to understand and navigate through these issues. So through our advisory, complex, compliance and assurance services, we are able to provide the mining companies with the guidance needed to remain legally compliant, financially sound, and operationally secure. You will agree with me that most of the mining companies that we do have do make publications of their financials on public forums. But normally you find that this information is in a language that is not common among ourselves or among people outside the accounting and accounting fraternity. So us as auditors and as accounting terms or as HLB, we are able to assist and support our counterparts in the journalism section by interpreting this information in a way that is very understandable and in a way that is easy to translate even as they are reporting on these issues. And with the reawakening of the mining sector on the copper belt, you do agree with me that there are a lot of issues surrounding the mines or what is going on the copper belt. And so there's a lot of misinformation that is going around. And so as auditors, we are able to interpret and give an accurate interpretation of these publications or information from the mining sector.
My name is Karen Mumbi, and I am a legal director at Chibesakunda Company. Chibesakunda Company, as has already been alluded to by my previous speakers, is a corporate and commercial law firm. So most of our work builds around commercial and corporate law. So Chibesakunda Company has 5 major practice areas. So we deal with litigation law, which is something I'm sure everybody is conversant with. We also have our corporate advisory department. We have our mining and real estate department, which is where I currently sit. And we also have our energy department and banking and finance. So I'll start off by just introducing our current regulatory framework. Zambia has just introduced a new act. It's called the Mineral Regulation Commission Act, and it has become the primary legislation that's governing mining in Zambia. Before the Mineral Regulation Commission Act, we had what was known as the Mines Act, which was enacted in 2015, and it served about a decade till now, and has now been repealed by what we're calling the Mineral Regulation Commission Act. So with the previous act, there were lots of different departments that I'm sure you're aware of, departments like the Department of Mine Safety. We had different departments within the Ministry of Mines that have now all been streamlined into what they're calling the Commission. So we no longer have the Cadastre Department, for example. Everything is now being referred to as the Commission. The essence of this, I guess, is to remove the fragmented departments that were initially in the ministry and streamline them to one reporting line. So the MRC will now have a single licensing authority, which they're calling the Commission, as I've already stated. And I think the point of this is to make licensing efficient. So the Mineral Regulation Commission has also created what they're calling the Mineral Regulation Commission Board. So this board will be appointed by the Minister of Mines, and it will constitute a couple of members, including a chairperson, a vice chairperson, and ministry representatives. So in the previous act that I was talking about, which was the Mines Act, it had what was called the MLC, the Mining Licensing Committee. So what we've seen now is that the people that were constituting the Mining Licensing Committee have now been streamlined into what they're calling the board. The board has also been given power now to elect who they're calling a Director General, which is a position that wasn't there before. So this person will now become sort of like an ex-official member of the board, and the board will also be at liberty to appoint a secretary and other staff. So some of the key changes and some of the notable changes of this Mineral Regulation Commission Act, which will be of note to you as journalists, is that obviously now I mentioned that the commission has been established and the various departments have been extinguished, essentially. What is also now being introduced is that for you to be able to hold a mining license or any sort of mining right, you need to consistently always have a valid tax clearance certificate. Now, if you go into the sector, you know that this is something that's quite difficult to maintain for a lot of these entities. And so not having that would disqualify you from holding a mining right. So that's just something that you could note. The other thing that we've seen the new act do is it's brought in partnerships with artisanal miners. This is quite a key area, I think, in the mining sector, because we've seen that a lot of artisanal miners have failed to advance themselves because they're at a point where they don't have the capacity, whether it's financial or operational, to be able to carry out some of the activities. One of the other things that has now been introduced is what they're calling commission consent. Initially, for you to be able to transfer a mining right to another person, you needed to get what was known as ministerial consent. So you write to the minister's office, and then they would allow you to transfer. So for example, if you're buying land, you go to the Ministry of Lands, and then they give you what is known as state's consent, which allows you to transfer. Mines usually have a similar mechanism, and it used to be called ministerial consent because it used to go through the minister's office. but we've seen that they're trying to now expunge that and remove some of those administrative functions of the minister, and they've now taken that to the commission. So everything is literally going through one single entity. So it's no longer being branched out between different departments. So now we've got what is known as commission consent. In terms of some of the key considerations, right? Like I said, the mining rights are granted under the Commission Act. They allow you to explore and extract minerals, but they do not include ownership of land. I think with a lot of my clients, one of the things that I see is they will fight me when I tell them that they don't have the rights to the land where their license is. And I'm like, but the license is at the bottom, the surface rights are at the top. And you see that the way that the law is drafted is that if you want to exercise your right to mine, you need to obtain consent from the surface rights holder. And in Zambia, surface rights are generally governed by two major issues. You have your customary land, which is the bulk of what we have in Zambia, and you also have your state land.
I want to ask one of the media question. What's happening at Chibuluma? Has anyone ever asked what's happening in Kalushi, around your back door? No one's asking these questions. So it tells you there's a lot of assets that can feed into our 3 million tons, but you are forgotten or written off. There are many mining assets we have in this country that can take us forward, but we have let them go and we say, oh, it doesn't work. But someone comes with $2 million, revamps the plant and it runs. So it tells you how to do with mine closure, also the environmental aspects, the social aspects, and obviously the government side. But I told you about the social. Remember a long time ago, people used to mine how? Rudimentary. Climbing in tunnels, bringing the copper out. How did you convert them? Now you created what? The people who you're now turning against because we taught them these habits. Socially, when the mines close down, there are many towns that are not able to deal with the outcome. I think some of you can understand if you stay in Kitwe, when people get paid, you've seen the lines at the ATMs. You've seen the knock-on effects of mining, eh? You can even tell people are followed, you know. Those of you who borrow money, it's time to pin the people. So these are things that you need to know and deal with mine closure. When the mine goes, how to deal with it, and rehabilitation. I think a lot of you, that's what I was saying, it's very nice if we can take it to a mine tour to understand what people are doing with these open pits. Are we backfilling them to put in water? For fishing, are we closing them off? Are there access to people who are going illegally? We have to know how we're going to close this. So it actually tells you the whole value chain and where we're going to go. In terms of this, I know you people want to talk about the supply part. I know some of you want to become suppliers. That's on the next slide. But that was giving you the whole value chain of the mine and what we need to do. These were junior miners. Whenever you go to some of these conferences and talks, have you seen the small guys, Mchenga, Goliano, and my favorite guy? If you know King Shad, he's got a gold operation. No one knows where it is, but he buys our product and it's quite good. So it tells you that any one of us can go into the value chain. You get what I'm saying? Depending on which point, you can be a trader, you think. So sometimes we only want people to fly in with suits and everything else. I'm not glorifying what this young man does, but we need to start taking ownership and start investing and doing things ourselves, because if you don't take those risks, who will? There's just right on your pads, you can Google it. There's a thing called BreX. It's a movie, it's a thing on YouTube and everything else. It tells how some people can hype up projects, make you believe, you invest, then. So we have things, but you have other projects where people have started and it's happening. So please, as media, before sometimes you publish stories that have not been fact-checked, please take your time and do the fact checks, because in the end, as an industry, it makes it so hard for us to get capital and invest in projects, because we are the ones promoting some of these stories that don't hold weight. So if you have a problem, get my number. I said, there's a geologist you can verify. You know what I'm saying? I can point you to and ask the people too, but please take your time to, before you sensationalize some stories, check them. And get a list of, I believe you're going to be going forward on mining media, get a list of people who can verify this information. Otherwise, we'll be misleading the masses and misleading our sources of capital, and it makes it so much harder for the real guys who are going to come in. Let me break down some of the processing, because this I love to share. Remember, we talked about two things, oxides and sulfides. So how you process them are two different ways. Let me talk about oxides, because these are most of the plants we see dotted around Kitwe. With the oxides, what the guys do is that when they find the oxides, make it simple, oxide, get it, crush it, add acid. Add acid, it becomes a pregnant solution, which is blue. You put power into that, it builds up, cathodes, done. Are we good? I say it again, oxides, add acid, stir, put power, cathodes. Are we good? Done. Let me go to sulfides, where you go to concentrator, because there are two sides, very, very simple. The next one is sulfides. Sulfides is more from underground. They come out, you concentrate. Concentrate, remember the other side, we're using what? Acid. This side, we use heat. When it gets concentrated, heat it up in the smelter, raise it up, take it to anode. Anode, when you refine it, it goes to cathode. So remember, two sides. Underground mines do what? Sulfides. Remember, sulfides are lower. You have a concentrator. Surface things where people are nitpicking and playing, oxides. Oxides, acid. So now you understand these plants you see around Kitwe. People stealing acid in their backyard while you have load shedding because someone is playing with power. That's what they're doing. If you ever gone to Mufungulwa or Chitambo in Serenge, where you hear your cousin has gone with can I borrow your car? Then he goes, that's where they're going. Because what happens is there are two types of deposits. You've got underground, you've got surface, but you've got placer. Placer are the ones you find the alluvial, where you find the gold. Just because, when there's accumulation, people start finding gold. That's the badness you see there. Obviously, this was in the pit in Inchanga. This is where, remember, the person lost his life. So the guys, mine safety, went there. But them, they were even scared. These other guys who used to go in and go and retrieve the body. So these are, remember, the issues we have concerning the mine closures. How you're taking care of your pits. Otherwise, people will go in there and nitpick. And if you've had a chance, go to Inchanga. See, I think now they've moved them out. KCM is trying their best to reclaim their mining rights. Because remember, when you get those mining rights, and she'll explain to you, is that you have a responsibility to protect and safeguard your mine areas.
As has been indicated, I will briefly just speak about the financial landscape from a mining perspective in terms of the role that financial institutions can play to support mining operations. I think a good place to start, and the previous presentation did give a great amount of detail. So we have the exploration, which lasts anywhere from about 5 to 15 years. And in this process, it's really around evaluating the land, around exploration, drilling, around defining the resource. And then we move into the mine development. So this is where you tackle processes like the permitting. I mean, we spoke about, the mining rights and the likes. We look at economic and technical reports, and then we look at the underlying mine construction process. And then you move to development, which typically, production, which typically runs from about 10 years. So any viable mining project should have a life of at least 10 years. Some of them run to as much as 30 years, 40 years. So during this stage, we're looking at ore extraction, we're looking at mineral production, and then we go into the mine closure, which runs from about 1 to 3 years. And there it's really around the site rehabilitation, as well as environmental monitoring. So if we look at, and the different stages require different types of financial interventions. But then if we look at the sources of funding that are available to these projects, there's really about 4 groups of funding. So the first one is equity. Now, when we talk about equity, there are various ways in which equity can be raised. The first is through what we call an IPO, or an initial public offering. This is where shares are floated on a recognized stock exchange for the first time. We also have a seasoned equity offering, which is where an entity that's already listed is subsequently issuing shares either through a rights issue to new investors or existing investors. And then we also have what is called a private placement. Now, if you look at the different categories of funding that we're going to explore, equity financing is actually the most expensive because equity investors require a project to generate an internal rate of return of anywhere between 10% and 25%. And this is not kwacha. This is dollar, hard currency. But equity is actually a required proportion or portion into any funding structure. So there are different ways in which you can look at the contributions. So you've got an equity first funding structure where the equity has to be provided or concluded. The equity investment has to be provided or concluded before any debt can be extended. Then you have a pro rata structure where equity and debt are provided in similar proportions and timings. And then you have a back-ended equity structure where the debt is raised first, and only then is the equity provided. And then you have what we call the export credit agencies, or the ECAs. These typically provide funding for the export of equipment that's required in the mining process, as well as providing political risk insurance. I think we were talking earlier about how external international investors are always nervous, especially when they're considering investing in a country, in a developing market like Zambia. They want certain assurances before that money comes in. So ECAs play that critical role of providing a form of political risk insurance.
Thank you, everybody, and a very good evening to our esteemed journalists who are with us. Thank you for spending the afternoon and evening with us. My name is Nyasha Vera, and I'm a communications expert, and I work in mining, strategic communications, and all things that have to do with renewable energy. So to start with, I will start this session with a question directed to our first panelist, Mrs. Karen Mumbi, who is a legal expert, and she presented on the different aspects of mining, including the Mineral Commission Act that is new, and she gave us much insights into that. So the question directed to you, Mrs. Karen, is, I think people are interested to know what are the emerging trends or opportunities in the mining value chain that you think will have a significant impact in the next coming years? And if so, how can stakeholders prepare for these changes?
Right, I think one of the things that we've noted and I've noted is there's a shift into, like the green economy, the green way of mining, where we're seeing a lot of the traditional mining sort of falling away, and we're seeing that more sustainable mining, more thought through mining has now sort of come through. And I think following that, that trend, you can see that in the next few years, some of the conversations that we have, around like ESG will become extremely important. And a lot of these mining houses will need to be aware of that. So building a skill set of just building understanding around, like sustainable mining, green funding as well, because there was the green funding that CEC got as well. So thinking around how best we can improve our processes and moving, to more sustainable mining. I think one of the panelists spoke about how, mining it's a depleting process. So you will not have your resource forever. So finding sustainable ways to still mine, but also think about the future and think about, where the world is going and how we can contribute to that trend as well.
I just wanted to ask, what are some challenges that you face in delivering goods and services to mining companies? As you mentioned earlier on, you have experience in this, and in your presentation you gave us a step-by-step, way of how the value chain is structured. Would you like to tell us what some of the challenges are in this aspect?
I'll always look at challenges as opportunities, but as you can say, when any person who is transacting or giving a product, we have to provide a service or a product which is the right price and is fit for purpose. So a challenge that one would obviously come through is always the payment cycles, but I would actually say that's an opportunity. And I was discussing it with the other presenters today that when you look at the mining cycle, it has peaks and troughs. Some days are good, sometimes are bad, depending on the price of the commodity which is being sold. But one of the key factors that ties into that is how the people in the value chain are able to obtain some of their payments. And if payments are timely and they are done on time, we're able to actually down the value chain, be able to pay our financiers, able to pay our staff on time, as well as where we're sourcing the product. Two issues that fall into that is that, one, I have been able to deal with most of my clients. Most of the top 3, top 4 are very good payers. They pay on time, actually above board. You cannot fault them on that. I think the issue that also comes in is the corruption that we have in the sector. Is that if we don't provide this product at the right price, inflation of prices, obviously because of the corrupt line that we have in it, it also causes an effect on the payment cycles, because you can take, for example, if a mine has put aside $40 or $50 million for payment of suppliers, and along that whole process, 10, 15, 20 products are being inflated, you'd find now the requirement is now $65, $70 million. The mine has to now go back to the financier, the bank, and say, can you extend me further credit? And it's a cost to the mine. Secondly, in terms of supplier, we're not being paid on time. It means that an invoice that was due in 14, 21 days gets pushed to 60 days. So you can actually see the snowball effect of what corruption does on the payment cycle. So I would say the challenges we have is that if suppliers are paid on time, we get a cheaper or more affordable product, but also turn back to the suppliers to make sure that we are not actually contributing to this effect, and we're making sure that we hold each other accountable on that side. So thank you on that one.
Thank you for those contributions. It's a good thing we have representation from the bank. And of course, I'll direct the question on facilitating investment and growth within the mining value chain to you, Mr. Luyanga. Could you tell us, what is your role in all of this? I mean, from, of course, the legal side of mining to the supplier side of mining. What's the bank's role in this aspect?
Okay, thank you very much. I think the bank's role is multifaceted. Like I mentioned, it's primarily around looking at how the bank can come in and provide capital in the form of debt. So that debt can be long-term, obviously given the characteristics of the different stages of that mine life cycle. You then need to provide a funding solution that then meets that specific requirement that the mining entity has at that particular point in time. So it's really just around making sure that the bank also has the expertise to really understand the mining operation to such a degree that we're not just shoving products down the mine's throat, because what we have seen is that you need to apply an appropriate funding structure. There's a process that we undertake also called right-sizing the debt. So by right-sizing the debt, we're trying to forecast the cash flows that the asset is going to produce over its life. Based on those cash flows, it will then tell you how much debt the mine will be able to raise. So once we determine that, we then come in and assess the risks, which then inform the pricing. There's always this talk about how interest rates in this market are high.
So our intention is always to make sure that we are properly assessing the risk associated with the project so that we can price the funding right. Not to choke the entity, because our interest, like I mentioned at the beginning of my presentation, is that we banks look after depositors' money. So our intention is always to make sure that when we lend money into a particular project, that we give ourselves the best chance of recovering that money through the operation.